Hello, investors. Welcome to Business Learnings. Which ELSS fund should you be invested in? Now, based on my knowledge, my understanding, I browsed through several and I filtered out top three of them. I'll be talking about these three. Just a disclaimer, this is not an investment advice. Please do your own research or consult your financial advisor before investing. And let's begin. We'll first talk about Parag Parikh Tax Saver Fund. Um, I'll tell you why do I like this fund. It has an AUM of just 85 crore rupees. It was launched last year in July 2019 was when it was launched. It doesn't come up in the list of ranks of top performing ELSS funds because it's simply not been around for that much time. Uh, the good thing is, out of this 85 crore rupees, about 6 crore rupees is contributed by their own employees, including their founders, the core team, their their CXOs, and that shows that they believe in having skin in the game. Managing someone else's money is easy, but putting your same money on the model that you are believing in, it says that you really believe in your portfolio, you really believe in the stocks that you have picked, and that says a lot, that builds a lot of confidence. And not only that, they have done the same in their flagship fund also, in their Parag Parikh equity fund also. In Parag Parikh equity fund, they have about 35% allocation in the foreign equities, and they have consistently outperformed the market. But that's not a talking point here. The talking point is they believe in having skin in the game, and they are willing to take risks on the stocks that they are researching upon, and that's what builds confidence in them. Now, their expense ratio is 1.15%. That might be a concern for some of you because most of the expense ratio is, if you put up 1 lakh rupees with Parag Parikh, they will charge approximately 1150 rupees every year, even if they do not generate any interest. That doesn't matter because ultimately the return you end up making matters. After all the expenses, the return you end up making matters, and they have delivered 30%, approximately 30% returns the past 1 year. And that's why I am very confident about them. Now, let's look at their top holdings. ITC is ITC holds about 7.7% in Parag Parikh Tax Saver Fund. ITC is one of my favorite stocks too, and that's what I like here. Bajaj Holdings is 5.2%, Central Depository Services 5.2%, Energy Exchange 5.1%. Pretty good set of stocks, and then a decent number of pharma stocks and a decent number of IT stocks. Recently I was reading about what industries should we be focusing for the next decade, that could be the next multi-baggers, and these two industries consistently were making the list: the IT industry and the pharma industry. IT industry, because of the growing work from home culture, the operational efficiencies are certainly going to increase, and there's a lot of growth there. And pharma, I don't have to mention it, the reason why pharma would grow. uh, Now, the fund manager is Rajiv Thakkar. So Mr. Rajiv Thakkar is the same fund manager who manages their flagship fund as well. uh, and to be honest, when I see their top holdings, they are almost same as their flagship fund, minus the foreign equities that they hold. So good for me, pretty good for me. Yes, their AUM is just 35 crore rupees, and I already talked about it. So overall, I'm very positive on Parag Parikh Tax Year Fund. Again, this is not an advice to buy it. The disclaimer is I have bought this fund, um, and actually I have bought all the three funds that I'm going to talk about today. Please do not take it as an investment advice. The next fund is Axis Long Term Equity Fund. The good thing about this is consistently on the top rank for the past few years among ELSS funds. For the past 5 years, it has given the growth rate of 15%, which means doubling your money basically every 5 years. your fund manager is Jinesh Gopani, and again he's quite popular. Uh, but there is one small problem that I would like to talk about. The AUM, asset under management, of this fund is 25,000 crore rupees, actually more than that, and that's a problem. That's kind of a problem. It's a problem because the bigger the fund grows, it becomes difficult for the fund to generate those kinds of returns. I'll give you an example. Let's say this fund wants to buy a particular stock. It goes to the market. It cannot buy the stock at the price at which the market has listed it. It's available, its current market price. It cannot buy it because it there are simply not enough liquidity. There are simply not enough sellers in the open market that would sell at the same price. They will have to increase their price. They'll have to buy at a higher price. Reason number one. Reason number two, the same thing happens at selling. They go and sell these stocks. They end up absorbing all the liquidity, all the buyers, and then they'll have to sell at lower prices, and that's a problem. And you know why this is a problem? This is a problem not just because they cannot sell at a given price. This is a problem also because this severely limits their universe of stocks. They cannot pick mid cap stocks or small cap stocks because they simply do not have enough liquidity. So this as a fund grows, it puts a lot of breaks in the journey. As the fund grows, of course, its AUM grows, the management fees that the fund earns grows with it, but they simply cannot perform as good as they were performing a few years ago. But everything aside, Axis Long-Term Equity Fund has been given quite a decent returns in the last few years. It has been consistent in the top three. So again, it's there in my list as well. Let's look at the top 10 holdings. Bajaj Finance Limited, TCS, Kotak Mahindra Bank, HDFC Bank, Nestle, Info Edge, DAM. I don't have to read any further. All these are quite good companies. Even if you just end up holding the top 10, even if you just buy the top 10 holdings of this particular fund and forget it for the next 10 years, you will easily generate 15% of the returns. I'll guarantee that. Now, please do not go and buy these. But the quality of stocks that they are owning is top notch, and we are expecting a lot of. We should expect a lot of upside in this fund going forward. Where is the expense ratio? The expense ratio is 0.88%. For Parag Parikh it was 1.15%. For Axis it's 0.88%. As the AUM grows, the expense ratio keeps falling down. The reason is because you have a lot of money to manage, you can charge a relatively lesser expense ratio, and this drives in more users. This drives in more investors, and you can simply cover your overheads, and you can still have a lot to which could go on till the profit. Yes, we talked about Axis. Now, Mirai Asset Tax Saver Fund. This is the third fund that we'll be talking about. Again, the fund manager is Nilesh Surana, the same fund manager who manages who manages Mirai Asset Emerging Blue Chip Fund, which is, in my opinion, the most popular fund amongst SIP holders, the people who do SIPs. Actually, Mirai Asset Emerging Blue Chip Fund, the flagship fund of Mirai Asset, is I'll be talking about that fund for the next 1 or 2 minutes. It was one of the first funds to introduce SIP only intakes. So you cannot go with 1 lakh rupees and drop it in Mirai Asset Emerging Blue Chip Fund. They do not accept that. They accept only SIPs. You can come to it only through SIPs, and that says that it wants to bring that investment discipline amongst its investors. Why is this important? This discipline is important because we as retail investors or any kind of investor, we face a lot of behavioral biases. We do not know. We invest when the market surges. we sell when the market crashes, while we have to do the opposite thing. And that's where SIP come in handy. SIP come here to help. What SIP says that you invest a fixed amount of money every month, no matter the markets are surging or crashing, and that averages out the stock prices, and that eventually gives you very good returns in the long term. And that's what the kind of discipline which Mirai Asset tries to instill into its investors. And that's why I like this fund. And as not the only reason, the other reason is it has been among the top three fund houses which have been giving great returns in the ALSS category for the past few years. It is about 6 years old. Let's look at the holdings. It has HDFC Bank, Infosys, ICICI, Tata Consultancy, Axis, Reliance Industry. Good set of companies, pretty good set of companies. The only problem that I face with Mirai Asset is it has about 60 stocks. I mean, seriously, are you not confident of your stocks? Are you not sure which are going to perform, which are not? Because if you are owning 60 stocks, it says that you are not sure about your own pickings. Anyways, ideally, if a company owns more than 50 stocks, if a fund house owns more than 50 stocks, it's kind of a turn off, because the fund house itself is not sure about which stocks are going to perform, which are not, and they have simply end up buying everything, and probably they'll just get what the index gets, 12-13%, plus 1.5% for dividends. So yes, this was about the numbers. Now, to decide the ranking, again my personal bias comes into the picture here. If I have to invest 1 lakh rupees across these three funds, I'll go with 50% in Parag Parikh about, and 20-25% each across Axis and Mirai Asset. The reason I have picked these numbers is because my love for Parag Parikh equity fund, their skin in the game, the kind of stocks they are holding on to, and their performance of their flagship fund, which is managed by the same fund manager. So I hope you learned something in this video. Thanks a lot if you have been watching this far. See you in the next video. Bye.